All right, everyone. Hi, my name is Sergio Marrero, and this is Rebel One Live. Today, we have a special treat. We have Kai Bond. He is a partner at Courtside Ventures, serial entrepreneur, formerly at Comcast Ventures, and was a general manager at the Samsung Accelerator. Thank you for joining us, Kai.
Great to be here. Thanks for having me.
Yeah, so I've known Kai in the space for quite a while. I've even pitched to him as an entrepreneur, and he was one of the few VCs that gave me really direct feedback, and I appreciated that and remember him for that early on. And I could tell he had the now I now understand that's the founder care, right? I say that not every VC has the courage to give. To give the feedback founders need to hear. But appreciated that. But I wanted to dive in. If you can share a little bit more about Courtside Ventures, can you
Sure.
enlighten us?
Absolutely. Yeah. So Courtside Ventures is an early stage venture fund. We started the fund in 2016. I joined the fund in September of 2019. That's a fund that's been around for a few years. Fund one was a $35 million fund. And the two founders of the fund, Vasu and Deepan, had a thesis, and their thesis was prove that sports is an investable category with venture backable returns. And over the course of the last 4 years, I think that thesis has proven itself out. We've done some great investments and had some great returns, a couple of successful exits along the way, and we're in the process now of continuing that in Fund Two. And we have three verticals that we focus on for investment. The first vertical we focus on is sports and sports media. The second vertical is fitness, health, and wellness. And the third vertical is gaming and esports. Each partner manages their own vertical, but we're very collaborative. We've all done investments in each other's categories. It's a very collaborative environment, small fund, so we can move quickly. But we are based in New York. We spend a lot of time on the West Coast. We invest globally. Typical check size for us at the seed is anywhere between 500,000 and 1.5 million. And then we continue to invest throughout the life cycle of the company, likely through the Series B with follow-on checks to maintain our ownership. And that would probably be up to about 3 or 4 million over the course of a company.
Great. That's thank you for that that overview of Courtside. I wanted to share. I want to ask you about your journey. If you can share a little bit more about starting as an entrepreneur and how that led you into venture capital.
Sure. My path really started out working in technology. I started off at Microsoft. I spent a few years out in Redmond working on emerging technologies, primarily focused on mobile services. And during the course of that time, I was fortunate to spend some time in Asia. And when we were launching Windows Mobile, one of our partners was Samsung. And I spent some time in Seoul launching with South Korea Telecom, Samsung devices on that network, as well as NTT Docomo in Japan. And when I spent time in Asia, 15 years ago, the gaming ecosystem was even more mature than the US was. And so this was at a very interesting moment in time. Microsoft, when I was there, was just about to launch the Xbox. And they were launching Xbox Live Arcade, which was the casual social component of Xbox. And so after spending some time in Asia looking at mobile gaming, brought back some IP, fortunate enough to work with some of the Xbox Live Arcade team, and really found my passion was going to be working with startups. I was working in an emerging team, small, but still inside of a big corporation, and innovation inside of a big corporate is always difficult. So I came back to New York City, where I am now, and worked for several startups. One of them was a game publisher called Oberon Media, another company in the mobile space called Rave Wireless. And during the course of my time working in mobile, working in gaming, I've worked with some phenomenal founders, some great teams that I still am very close with. But when I looked at the companies and saw my ownership and understood where they sat within the ecosystem, I kind of came to the realization that, if you wanted to really drive the mission and vision of the product, the business, the way you wanted to, you had to really start your own company. And so I ended up founding a company, my first business in 2006 called Switch Games. We raised $600,000 in seed money. And, through that path, I continued to start companies. So I started 3 companies over the course of about 7 years. 2 were in the gaming space. So Switch Games was peer-to-peer game trading. We were going after GameStop's, multi-billion-dollar hold on the used game ecosystem. Ended up winding that business down in a really difficult manner. A lot of lessons learned, but continued to improve my craft. Had the same co-founder for the second business we started called Cash Play Games. We developed that in an accelerator program called Hatch Labs, which is often known for launching Tinder out of that accelerator. And spent some time there working on a mobile game studio, creating IP. Got really close to an exit, in the last hour of the last day of our signed LOI, that completely collapsed and fell through. So one of the hardest meetings of my life was having a banker on Friday afternoon tell us the deal was a layup, and then Monday morning coming in and telling the team that the deal had collapsed. So that business inevitably didn't make it. It was a really unfortunate series of events, but we stopped fundraising. We entered into this LOI. And 2 days after that, Superstorm Sandy hit New York. Our offices were washed out. Just a really difficult time. Took some time to reflect and think about what I wanted to do next. And, decided that really what I'm good at and what I'm passionate about is starting companies. So I started a third company, and that business was called Pixie TV. It was an interactive streaming platform. The idea was to create contextually relevant and custom content for broadcast television. Everybody's broadcast feed is the exact same today, but if you look at your Instagram, Facebook, Twitter feed, your phone homepage, everything is custom. And so we were trying to break through the clutter and figure out how can we create a custom TV experience. We created a bunch of really interesting products, inevitably pivoted the business a little bit to create a back-end platform that looked a lot like Squarespace or Wix for smart TV app development. There was huge fragmentation in the smart TV ecosystem. We built that product out. That business was acquired by Samsung in 2014. I ended up working, deploying that product globally. It's now called Samsung Extra. It's available on 60 million TVs globally now. And that was a really exciting time. Again, very difficult to innovate inside of a large organization. So, I transitioned out into what was at the time called the Global Innovation Center for Samsung. It's now referred to as Samsung Next. And they have one mission, which is bring the world's best software into the Samsung hardware. And so I worked running their New York office as the GM. We invested in 9 businesses at the pre-seed stage, really founder bets on areas of interest that were strategic to Samsung. After about a year of doing that, I was fortunate enough to have the opportunity to join Comcast Ventures Catalyst Fund. So Catalyst Fund is a $20 million fund dedicated to investing in African-American and Latinx founders. Very proud that, over 50% of the investments we made in that portfolio were also female founders. So strong representation across all underestimated groups in the ecosystem. We did everything from gaming to direct-to-consumer media. Some of the investments, I'm sure everyone here is familiar with. Blavity was one of those. We did Lust Brands, which is a direct-to-consumer hair care company. We did Players Lounge in the gaming space, which is head-to-head wagering on games of skill. And as I started making these investments, Comcast as a corporation, as well as Comcast Ventures, was taking a much broader interest in investing and acquiring assets in the gaming ecosystem, right? They could see the network traffic, what was driving growth. You've seen recent numbers around gaming, 100% increase in network traffic for large ISPs in the US. With that trend, we continue to make more and more investments, not only in Catalyst Fund, but also the Comcast Ventures flagship fund. I ended up co-investing with the Courtside team on 4 of those deals. So, Courtside was initially really focused on sports, but many of the investors that we have and LPs in our fund have interest in assets in sports. And so as esports continued to kind of dominate viewership, interactivity, you saw the acquisition of Twitch by Amazon and becoming a mainstream media play. there was a lot of activity that we thought made sense to invest in esports ecosystem. Some of those investments, like Beam, which is now called Mixer, were acquired by Microsoft. And so we've had a couple of highly successful investments in the space. We'll continue to place money into the esports ecosystem. But really, my background coming in from the gaming side is, if you follow the dollars, gaming is a $150 billion industry globally. Esports is $1 billion, right? It's growing. It will continue to have a larger slice of the pie from media spend and engagement. But we wanted to have a better blend, and so had a lot of conversations with the team. Had known the team at Courtside since 2006, and so 14 years. We'd co-invested when I was at Samsung, co-invested at Comcast Ventures and Catalyst Fund. And when time came, they offered me the opportunity to join. Spent a lot of time because team really is everything. Spent 6 months kind of making sure it was the right fit, and made the leap in September of 2019. So I've been at Courtside since that time. I've done 2 investments, have one that's been approved by an investment committee. Hopefully that will, close in the next 30 to 45 days. But we've done 7 investments and are remaining active through all of the madness of the markets right now.
Great. Thank you for sharing that. Before we dive into the esports, because that's definitely the trend that's moving, and lots of questions about sports now that we are in quarantine and have to socially distance ourselves. I wanted to ask about your background. You started a number of startups. So can you speak to where the passion comes from to start ventures, but also in the entertainment and media space?
Sure. Look, starting a company is a fairly irrational, fairly irrational way to make money, right? And it's really not about, success from a financial perspective. Right? You have to do something that you really love. And in my case, I love sports. Pixie was in the sports space. I love gaming. And so I founded companies in spaces that I was really passionate about. And so, it's been, a bit of a journey to say, look, I'm going to dedicate my life to the pursuit of something that I actually enjoy, right? And I want to spend, if I'm going to work 20 hours a day, right, I want to make sure that what I'm working on is something I actually care about and enjoy. So, that's a big part of it. I think for any founder who, comes into my office and they're like, we had a list of 6 ideas and we chose this one. And I'm like, this is terrible. Like, yeah, I don't know how you're going to get through those, long nights, how you're going to get through those times when the shit hits the fan, and persevere through them. And so, part of it was really around finding something I love. The other component to entrepreneurship, I think, to me, it's very similar to sports in a lot of ways, which is you have to refine your craft. You have to continue to get better. There's a commitment to it. There's a dedication to it that you have to continue to want to get better, right? And I look for that in a lot of founders. What is the coachability? If you play a sport, it probably takes you 10 years before you're any good at it, right? If you play an instrument, if you're an artist, a photographer, right? These are crafts that there's an art and a science to all of them. And if you are not fully committed to being an entrepreneur and making that part of who you are at the core DNA, it's something that doesn't make any sense. So my father was an entrepreneur. He started a business. My grandfather was an entrepreneur. My family dinners growing up were about, what invoices were outstanding and who they had to call, and how sales meetings went. And so I was very fortunate to grow up in an environment where it felt natural and organic for me. And then the third is, like, I just hated working for people, quite honestly. Like, I just found it to be really fucking annoying. And so for me, it led to a pretty clear path of, if I'm going to do something, I need to love it. I'm going to work for myself, and continue to improve and get better.
And you could see that even at Comcast when you talked about starting the Catalyst Fund within the larger conglomerate, right? Still having that that independence and creativity for sure. So no, thank you for sharing that. Diving into the esports, you mentioned that it has surpassed $1 billion. A portion of that initially was, it was taking off in Asia, now taking off in the US. I
Yep.
remember years ago being baffled that people filled stadiums to watch people play games. I was,
Yep.
I couldn't believe it, but you could see it coming. And then
Yep.
now we're in this time when we need to be virtual and people are looking for content to consume. So can you share a little bit about where the evolution that you've seen in esports and where you see it going?
Sure. You know, gaming is interesting, right? If you think about how highly social gaming is, you can talk about going to arcades and playing people in Street Fighter or Tekken, or playing NBA jams at an arcade and looking and try to figure out how you're going to get onto the leaderboard, right? And that was your local competition, right? And so, that moved into LAN parties, right? And, when I was in college, we used to have, people come over and play, NBA Live, in Friday nights before we went out and have tournaments, right? And so, gaming is inherently a social experience. I think the misconception around, gaming being limited to, the guy who's playing World of Warcraft in his mom's basement, those days are gone. You look at a game like Words with Friends, whose audience skews, above 35 and primarily female, and people who play Words with Friends are chatting, they're talking, right? And so when we think about, gaming as a platform, gaming is inherently social. And we see that in things like Fortnite, right? The Travis Scott concert, 12.3 million people tune in live into Fortnite to watch that concert, right? You have to sell out MSG 600 nights in a row if you want to get those kind of numbers, right? So there's more to gaming than people recognize. And what we talk about a lot of the time is it's inherently social. So esports is part of that, right? Esports, there's a highly competitive element at the top of great players, and people want to watch them, right? There's a whole other subset in that middle that are avid and core gamers who want to compete with their friends and play and have fun, right? A company that we've invested in, like Players Lounge, we look at that as the new poker night, right? I can bet you $10 that I can beat you in a game of FIFA. The winner gets $18, the house takes 10%, right? It's no different than going to somebody's house, playing a couple games of poker, having fun with your friends. The difference is you're virtual, and it's not in person. And so, when we think about the future of social interactivity across the web, a fundamental belief of ours is that gaming and gaming services will drive the next wave of social engagement, right? And we're seeing that with companies like Discord. You're seeing that with companies like Twitch, and we're just at the very beginning days of this. And, the large companies that have huge audiences and eyeballs like Facebook and Microsoft are getting into that, right? And so I think it's just an exciting time to be part of the space. I think that there's still a ton of opportunity for growth. And, we're really in the, just the second and third inning of this.
Got it. And where do you see existing sports evolving, if at all? Especially now, we can't convene in stadiums at the moment, right? We will
Yep.
be able to again one day, but there's this middle period where it's almost in a sense. I mean, at least my opinion. I was saying that I thought in that way in the future, right? There would be more of this virtual watching of the physical games
Yep.
beyond television, right? Like this, and now we're sort of accelerating to that because we can't convene even if we wanted to. So where do you see some of the major league sports
Yep.
evolving?
Sure. So, my perspective is, I'm an optimist, right? And I think, having lived through, a post 9/11 world, there are a lot of people who are like, who's ever going to work in a high rise again, right? Like large groups of people aren't going to get together, right? And I think, as the human race, like we're very resilient, right? And so there is a natural desire to get together and be with other people, and that's not going to go away. And whether that's sports or whether that's concerts, these events will still take place and they will happen. I think, from my conversations with a lot of the folks at the leagues and various teams that we work with, a lot of emphasis is, really on a pre and a post vaccine world, right? And so there will be a definitive moment in time when everyone feels much more comfortable. Until that point, I think that we're still in for, what is a lot of uncertainty with these. And so, when you look at, a 50-inch TV with, OLED and, high quality 4K graphics and delivering great experiences in the living room, that's great. People will continue to engage and watch TV and watch live sports at home. But, for anyone who's ever been to the Olympics or been to the World Cup, right, these are moments where the entire world comes together. And, one of our big theses around this is, the world will come back together. And we think sports can be one of these unifying moments, post coronavirus and COVID, that we look to that is a unifier. And so, we're optimistic about what the future of sports holds. When we look at a market like the US and you look at youth sports, right? Youth sports is a $17 billion industry. And so, the idea that you still want youth and participatory sports, that's not going away, right? And so, we remain optimists. There's certainly some turbulence in the market right now as it pertains to the leagues, to teams, to players, but we have our hopes up.
Great. And if you taking a step back and looking at like some of your current portfolio companies, especially the esports, what are the areas of opportunity that you're seeing hold the most promise within that space? Or maybe
Sure.
not just esports, you could broaden it up to you talk about like the digital entertainment, not just
Right.
the sports.
Sure. Yeah. So look, like I said, gaming is a fascinating, area. To be clear, there would be no esports if there weren't great games, right? So you kind of always have to start with the game, right? Like people love NBA 2K, right? When you look at somebody like Epic Games, right? They create Fortnite. Epic is fascinating because they have taken the, antithesis of organized leagues, right, and structure. So they have a tournament and they have the World Cup, the Fortnite World Cup that goes on, but it's a media event, right? And it's much different than Activision having the Overwatch League and having franchises that are sold and looking, very much a parallel to what we see with the proper structure of an NBA or an NFL, right? Players have rights, they have salaries, they have benefits. There's structure put in place to ensure that, you're creating an environment where a league can thrive. So, we are investors in Fund One. We invested in 100 Thieves. 100 Thieves is one of the best lifestyle brands in esports. The team performs incredibly well in tournaments, but they have a huge following on social media and some of the most popular streamers in the world. We've invested in companies like Beam, which were interactive streaming platforms. We see a ton of opportunity in the picks and shovels areas of esports as well. So, today, when you look at, what are the types of analytics companies that are out there, right? There's always an analytics company that evolves and emerges to own a certain space. The analytics companies that were great in Web 1.0 weren't great in Web 2.0, right? And so you see the mixed panels and you see these new emerging. So those are areas of interest for us, certainly. When we look at the overall investment thesis at Courtside as it pertains, we invest in game studios, so people that are creating original IP. I made an investment recently in a company called Nifty Games. They are creating hyper-casual, mobile-first sports content, right? So if you look at the history of sports content on mobile devices, it's been taken from a console and put onto a phone, right? And if you look at the parallel in the web world, Facebook was a great desktop experience. It was really good on the phone, much like Madden was great on a console and it's great on a phone. However, Instagram, TikTok, true mobile first experiences dominate that platform now. And so we made a bet in Nifty because they are focused on mobile first, 2-minute head-to-head inherently social gameplay. And so really the key on mobile is how do you steal minutes, right? Everybody's working, they have, tons of apps, they already have an engagement pattern. So how do you break through the noise and through the clutter and get that engagement? So we'll invest in original studios that are creating IP, and we're really excited about that investment. We will continue to look at social as a second pillar. So, when you think about what is going on in and around gaming, right? Esports is part of that, but there are other areas. I'm a big believer that there will be a short form content play for the rest of the world. So if you think about, emerging markets like Nigeria, where the vast majority of the population is probably still going and getting top-ups on a mobile phone, right? And there's not ubiquitous Wi-Fi and 5G networks everywhere. How are they going to consume? They're not going to be watching 4 hours of Twitch a night on a mobile device, right? So what is the equivalent of overtime for sports look like for gaming? That's a big thesis area for us as well.
So that's great to add color to for the aspiring or for the investors in this space. You're not investing in a game, you're investing in a game studio, right? That's an example. So can you talk a little bit about you're de-risking that investment, right? You're not betting on one game. It's not like betting on a movie necessarily. But when you're looking at a game studio, what are you looking for? You mentioned IP, like what type of, the mobile first, but what other elements are you looking for when you're saying this studio, I'm willing to back?
Right. So a big part of what we do in studios is we look for founders who have worked on great IP that are repeat founders. As hard as it is to say, a lot of the people who've created great IP have had huge budgets from large publishers, and if they slip a release, it's not going to be the end of the world. But when you're working on a startup and you need to ship and get your product out the door, a great emphasis for us is working with founders who have already worked in startups in game studios and have expertise in a certain space. So the other aspect of this is, when you look at the portfolio construction of large publicly traded game publishers, there are, they take a portfolio approach, right? They want to have a top 10 hit in, their first person shooters, their sports titles, role-playing games, strategy. And so we try to look at, where are the gaps in portfolios? Where do we think that there's room to maneuver? Where's greenfield, where you're not competing head to head with a major publisher out in the market and just trying to make a knockoff of something that's better? It's going to be incredibly difficult to do. And so, I always use the example. I love playing Street Fighter and Tekken growing up. And outside of Super Smash, you haven't really had a cross-platform fighting game that has taken off, right? And so, we still believe that, the future of gaming will be cross-platform, and that you need to, focus on genres that are still, very wide open. And if you have founders who have worked in those areas, we will back them.
And if for you, what are the bounds of some of the investments that you're looking at? Do you consider, let's say, it's not sports related, but it's e-consumption related? So let's say they're taking a concert virtual. Is that within your realm as well?
Yeah, we'll push the boundaries for sure, right? Where, really Courtside, we sit the intersection of media and entertainment, right? And that's really what it is. Sports are entertainment, gaming is entertainment. And so, when we think about our approach to the market, we have to make sure that we're not going to miss out on something because it's so tightly bound by the confines of our fund. That being said, we are thesis-driven investors, right? And so, for our healthcare practice, we publish our thesis. For our sports practice, we publish our thesis. Same thing for gaming. And so, given 20 years of experience in a particular vertical, you have strong conviction in certain areas. I talked to a founder today that's, creating a game, and it's just a genre I don't know a lot about, right? And I told him, this is very interesting. You clearly have the expertise in the space. I would back you as a founder. I have a lot of homework to do to get better in this particular genre. And I need to go back to my network of co-investors and figure out who believes in this space as a next big market that they can go after mobile first. So, it continues to evolve. We continue to get better, right? I think it was no different from me being a founder of a company in 2006 to being, the founder of a venture fund now. The fundamental belief in one of the things we talk about a lot in in our area is sometimes we can get jaded, right? We're like, oh, we've already seen all the daily fantasy stuff there is to see. No one else is going to win. And, technology changes, right? There's disruptive forces in the market that come out that enable a small player to win. And so, one of our big focus areas as a fund is take meetings with founders, and even if we don't believe in what they're doing, prove us wrong, right? We want to have that intellectual debate. We want to be rigorous around testing our hypothesis, and we track everything. And sometimes we're wrong, right? And we're like, oh shit, we missed that deal. This was our thesis. This is why it didn't fit. What do we have to rethink, and why did we miss this? What was wrong with our thesis here? And so we're constantly in the process of refining that. And if you're not, then you're doing yourself a disjustice, whether it's disservice, whether you're, a startup founder or running a fund.
I think that's a very important point to reflect, because especially in the VC space, the feedback cycle is so long. You want to make sure that you at least are taking some feedback to course correct.
Yep.
Hey, you mentioned short form content. Can you share your thoughts on? I think it's Quibi. They raised 1.7 or almost $2 billion. On focused on short term form content.
Yep.
Can you share what are your thoughts on what they're doing, and
Sure.
such a massive bet?
Yeah, it's a massive bet, but you look at the people who founded the company and have had massive outcomes, right? So if you're going to bet on a team, somebody who's run multi-billion-dollar publicly traded companies is probably a good place to make a bet. Unfortunately, we can't get ourselves in a round. We wouldn't be able to get the ownership that we needed in that case. But I think high quality short form content is something that we've seen come to the forefront, right? And whether that was Vine many years ago, right? Whether that's an HQ trivia, right, that takes the world by storm. It's not 1 minute, 30-second, right? But there's a spectrum of short form content, right? And I think everyone thinks TikTok, right, when they think short form content. But the reality is, there's a broad spectrum from anywhere from 5 seconds to 15 minutes. And I think Quibi's playing in a fascinating space. They have some amazing talent that's come on board. I think at the end of the day, it's a volume question of identifying what is working with that, and then really doubling down on the areas that work. But look, anybody who's creating content in this day and age, and you can talk about this from the Netflix of the world to Apple, they are spending billions of dollars on content creation, and they're using data that they have on the back end of what is and isn't working, and then they're doubling down on certain areas that are. So, I expect there will be more short form content bets in market, and I'm a fan. I hope it works out. Incredible amount of money raised in a very short order at a particularly early stage. So who knows what the outcome will look like, but we're a believer in what they're doing.
Great. Another recent event, and shifting focus into the world of AR and VR. I know Magic Leap was the startup that was backed the most, and they just let go of about 1,000 employees. I had the privilege of visiting the facility, saw the technology they're pushing. It is truly amazing, and they're really fusing the digital and physical world. So it was impressive to see. But in terms of product market fit, didn't see the consumer adoption that they needed. Any thoughts on where the AR VR space comes to play now and where it's going?
Sure. Look, I spent a bunch of time when I was at Samsung investing in, early stage VR and AR startups. I have a lot of friends who are working in the space now. My former co-founder who started several companies as a startup in the space. Look, there is no doubt in my mind that one day we're going to have AR glasses that look like this, right?
Absolutely.
That you're going to pop on, and most likely the compute will happen on a mobile device or somewhere else. Look, you have to believe 5G networks are coming. You have to believe that in Moore's law, and so you're going to see processing power continue to improve. You'll see improved battery life, right? So there's going to be technological developments. I think some of the things that the industry is suffering from today is no different than what we saw with people who are working in mobile in the early 90s. You're on a 2G network on a flip phone using T9 text input, It was the shittiest experience in the world, but people still used it, right? And then all of a sudden one day, boom, the iPhone comes out and there's a proper app store, a huge screen, and now everybody's carrying a console in their pocket and has the ability to engage in immersive experiences all the time. So, companies like Niantic, even Epic, right? Tim Sweeney, I think, is not mentioned enough when we talk about the Gates and the Jobs and the Zuckerbergs of the world. He's the CEO of Epic, right? He's one of the smartest human beings on the planet. And one of his big themes is, look, the metaverse is coming, right? And if you believe that 12 million people log in to watch an interactive Travis Scott show, that's just the tip of the iceberg in terms of where we're going to go. So I'm very bullish on, the future of mixed reality. I think we're at a very early stage. And what ended up happening in the cycle is a lot of people who made bets haven't had returns for their fund. And so they're very hesitant to make a new bet, right? So the industry is now, suffering from that, right? The trough of disillusionment, and it'll come back around. And I hope that there's a new wave soon. I would expect that, look, if you ever play and use the Sony VR experience in their games, it's fantastic. I really hope that Microsoft pushes the boundaries here of what they can do with Xbox and gaming. I do think it will come from gaming and it will evolve out of that into common interactive experiences, but very bullish. Right now, it's just very early in the cycle.
Great. And can you one of the concepts that there's viewing, right, the AR VR, and then there was this whole concept that really blew my mind when I understood it of they call it spatial computing, right? The collecting the information, this digital layer on top of the physical our physical world over time, right? So it's and being able to share that. When I same thing, when I experienced it, I was blown away. And I think you're right. Like gaming is the natural place for that's already happening, right? A natural place for that to take off. Any hypotheses of other areas that it would,
I think the education space. Yeah, Spatial is a fascinating company. I think, education, if you've ever seen some of the HoloLens demos of, physicians using it in medical schools, right? So one of the trends that you've seen in higher education is, not wanting to have cadavers on campus. And so, you have your HoloLens on and it is a full human skeleton. You can throw the nerves on and, it's amazing. You can construct and deconstruct a human. And so I think the areas of education are particularly fascinating for the use cases. When I think about distance learning and you think about what's going on now, the ability to have more social interaction other than sitting across, this is great. Thank you very much for setting it up. Would I love to be able to have a more immersive experience? Sure. Right. And I think education in the next younger generation that's gone through this will really think about how distance learning is transformed through these experiences. That's probably one of the biggest areas. Mapping is a natural one when you talk about it, heads up displays. How many times I see somebody driving and they're doing this, right, and looking down. So having a heads up display for navigation is a natural extension of this area. And then, a lot of the interesting stuff that we're seeing in biopharmaceutical manufacturing, the ability to be in a lab and not have to take off, your gloves and write something on them, go and fully wash and go back in. And there's been a lot of interesting startups that we've looked at in the past that are in the enterprise level. So I think you're going to see, this sort of bifurcation, right? You're going to have your consumer applications around media and entertainment, and then you're going to have sort of your enterprise stuff, probably around education, navigation, and enterprise solutions.
Yeah. The enterprise will bring the Minority Report to life that we've been waiting for so long. That's right. that interface. No, this has been great. I wanted to shift a little bit and ask about, this has been great insight onto the space. Can you talk about the role of it? You've been in the corporate venture space for quite a while, being at Samsung, Accelerator, then Comcast. Can you talk about the role that corporate venture capital has played and is I feel like it's matured and has shifted.
Yeah.
Can you talk about how that's changed and do you think it's here to stay?
Sure. I think there's two types of corporate venture funds, right? And far too often, all CVCs get lumped into the same thing, right? So you have corporate venture funds that are set up as proper funds, right? They have a fund life cycle, they have carry and upside, and they're really structured as an independent entity that's managed as part of a larger holding company, right? And you saw GV, Google Ventures, and then GV kind of evolve into this. Comcast Ventures, I think, does a great job of this. And then you have your strategics, right, that come in and are dedicated to identifying opportunities, business units, business unit lines that they can add value to that startup and gain knowledge from and help accelerate the business. So, two types of corporate VCs. I think you've seen a lot of the sort of strategics move into the proper fund formation because they understand that getting into the best deals, ultimately you want the most alignment, and alignment comes with upside. And so if you don't have that alignment, you can really struggle to win deals. And that's why you see fewer corporates leading large rounds, but participating and following on and being instrumental. So, every venture capitalist in the world or founders out there will tell you, like, we're value add, right? Like, we bring a ton of value to the table. Like, well, what do you really do, right? And so, I do think that the right strategic, CVCs can add a tremendous amount of value. I think, Dave Zilberman, who's at Comcast Ventures, did a tremendous job of this. He did enterprise software. Comcast, one of the largest corporations in the country, getting startups and enterprise software deployed within the network, right? You're now gaining 180,000 seats, and access, right? It's a huge enterprise account, but really it's also learning, right? Because our teams were very willing to work with them. And so I do think there's a place for them in CVC. When it comes to, why I think so many people are drawn towards the venture ecosystem. And for me, it was very similar as a founder, which is we want to be there at the very, very first check into a company, right? So I've led 3 deals on the Courtside team so far. We were first checks into 2 of those companies, and very active in taking board seats. And so my value add is very different, right? My value add is because, hey, I'm a founder. I've started several companies. Which lawyer should you use? Who's the accountant? How do you staff up? How do you build company culture? What are best practices for structuring your HR plans? How are you going to recruit someone who has an offer from Google? It might be worth a lot of money, but hey, like, they might just be working on AdWords and it's not that thrilling, right? And so, the idea of structuring an organization is important, right? And, my 2 partners on the Courtside team have founded companies, and that's something that we bring to the table. Our strategic relationships with teams, with leagues, I think that's unprecedented from anybody else that you see in the industry who's investing in these spaces. And so, we bring domain expertise, and we believe that, over the course of the last 15 to 20 years of refining those relationships, company building, in our network, that we have a lot to add. But, we will continue to see sort of the give and take, right? And I think we're at a very critical moment in time for corporate venture capital, which was really nice to have these teams when the economy was going this way. But if they're not generating real returns, how do you justify having teams of 15 or 20 people running around doing deals for small equity ownership that might not return, have real fund returners? So I hope that they continue to support these initiatives. It's important. I always say there's still not enough money in the venture ecosystem. People say there's too much. Go and talk to, the 199 founders I passed on in the last 6 months, and they'll tell you that there's not.
Got it. Yeah, and I think I appreciate that, because you gave a lens onto not only investors but founders to think about the value add in the relationship beyond just the capital.
Yep.
From the expertise to the relationships that they bring. You've been generous with your time. I want to close out and ask you, for founders that are starting out in this space, of course. Yep. You said looking for a founder who's done it before is useful, but let's say they haven't, or maybe they've done it once, maybe once before. What are characteristics you look for, and what advice would you give them at this time?
Yeah. And to be clear, look, I've backed a lot of first-time founders, throughout the course of my career, and there are a couple of core characteristics we look for. Core competency and expertise in a particular vertical can't be unmet. So sometimes people come out of a space and they're the person to solve the problem because they spend 10 years on it, right? And they may have come out of a big corporate, but they know that every single client they've talked to for the last 3 years has been asking for something that no solution in market is delivering, right? And so, you have to believe in that they have the coachability, that they have the acumen to kind of, take off and run with it. But, I mentioned coachability as a huge characteristic that we look at, the thirst to continue to get better. Domain expertise is incredibly important. You're inevitably going to be in sales if you run a company, right? You have to sell your vision to your customers. You have to sell your vision to the VCs. You have to sell your vision to the people who are coming on as employees, right? That they're going to join you on this mission where they probably don't have outsized equity, and they're taking a bet on a founder. And so we look for someone who has the ability to tell a great story, execution, and been able to deliver. But the most important thing that I always say to founders is like, look, I developed relationships. Look, I heard no 150 times my first company, right? I pitched everyone. I went to Sand Hill Road. Anybody would take a meeting with me. And now I look back and I'm like, this is dumb. Like they weren't going to invest in my business. Like they were being polite that they got a warm intro and they're eating, lunch while I'm, pouring my heart and soul out in their conference room. And they didn't really give a shit. So, this is a relationship game. I was very fortunate to sit down with a great investor recently. He said, ask for money, get advice. Ask for advice, get money. And so, build a relationship, right? Focus on it. Be very diligent about follow-ups. This is what we said we were going to do last quarter. This is where we fell short. This is where we delivered. I've gone back on companies that I initially didn't invest in. And then the next round, I'm like, this person said they did everything that they were going to do over the course of the last 3 quarterly updates. And there's room available right now. I want to get into this deal because I believe in their ability to execute. And so you have to be methodical and incredibly focused on developing long-term relationships in the venture game because, we're talking about a 10-year fund cycle, right? Our LPs are talking about 100 years of capital that they need to have for the pension funds that they're managing money for. And so it's a very long game. If you're serious about it, there are no shortcuts. You just have to put in the work.
Love it. So I'm going to end right on there, Kai. You are the man. Appreciate your time. So this is Kai Bond, everyone, partner at Courtside Ventures. Thanks for joining us today. This is Rebel One Live. So join us every Tuesday, Thursday night, 7 p.m. Eastern time. And thanks again, Kai, for dropping your knowledge and joining us tonight.
Thanks for having me. Always a pleasure.